Okay, welcome back. So you've got the market, which is down about 55. So on the downside, I mean, that's the skew broadly across stocks and indices. As promised, we've got the management of Samvardhana Motherson joining us to talk to us about their earnings. Steady second quarter numbers. Revenues have gone up almost 30%. However, the problem is debt, which has risen quite sharply due to a payout impact for closing out acquisitions that they made. We have Mr. Pankaj Mittal, Chief Operating Officer at Samvardhana Motherson, to take us through some of this detail. Pankaj, great to have you with us here. Good morning. Appreciate your time. Prashant this side. Let's just start with that, the debt issue, which you had highlighted will go up. So I believe it's gone up almost 5,100 crores, and it now stands at 13,416 crores, the net debt. Could you tell us how this number will pan out in H2? Where do you expect to close out the year at?
Good morning, and wish you a very happy Dhanteras and a happy Diwali to you and your families. As far as debt is concerned, it is by design because we have acquired many assets at the behest of our customers. About 15 acquisitions which we had announced. Many of them have already closed. Some of them are in the closing. And most of this money, as we have explained, is on account of payouts for these acquired entities. If you see, we have a very healthy level of the times to EBITDA. So we have a target that we should not go beyond 2.5. We are at the moment around 1.9. We see that as these new acquisitions come in and they start to give more benefits in Q3, Q4, which is normally stronger than Q1, Q2, then it should remain at this level or even come down below the multiple, so below 1.9. That's how we see it. It's by design, and that's how you see a growing company, which is growing at a very rapid pace. If we look at year-on-year growth, we have grown by more than 5,000 crores in this quarter compared to the same quarter last year. The organic and inorganic growth and growing in the emerging markets.
Absolutely, sir. We appreciate you giving us some clarity on that front. And we also welcome Mr. Kunal Malani, who joins us on this call. Well, gentlemen, good morning. You've told us the reason why the debt has gone up. But I just want two pointed points out here. From here, where do you see the debt headed? Will it be a little bit lower? If yes, at the end of FY24 and FY25, what does that number come down to? And also, if you could give us a sense on the outlook on margins. Because on a sequential basis as well, it did dip by close to around 80 basis points. Please go ahead.
Thank you so much for having us on the show. From a direction perspective, I think we are on a deleveraging path, as I've constantly been saying. There is a working capital bloating up that happened in the last few quarters, or in the last many quarters, actually post-COVID, which we are trying to liquidate now. You would have seen that from around about 2,000 crores of excess inventory, we are down to 1,500, and directionally we will try to bring this down further. Organically, if you look at it, the business is having lots of shoots of growth. That's why you've seen the capex guidance being 4,500 crores. And as that plays out, we should see again a deleveraging path into play. Quarter 3, quarter 4 are typically better quarters than quarter 1, quarter 2. That's just the seasonality of the business. And hence, as quarter 3, quarter 4 kicks in, you should be able to see again the net debt to EBITDA trending downwards.
Okay.
With what we know today, I think we should head closer to the 1.6 levels again by March or.
This is March of 2024, Kunal? 1.6.
That's right.
All right.
Yeah,
Kunal,
somewhere in that March 24.
And Kunal, you were going to answer the point as well on margins. Debt directionally will be lower from here. And on margins, will it directionally be up from here?
As I said, quarter 3, quarter 4 should be looking better. Again, please track us on the absolute value, not the percentage margin, because there are lots of commodities that feature in there, plus a lot of bought out parts that feature in there. So better to track us on an absolute basis, which we expect to grow from here on further on. So hence I'm saying from a net debt to EBITDA levels, we should be down to around about 1.6 odd by March 24 with the current set of assets and growth path that we know.
Okay, so just to expand on that point, Mr. Mittal, the market will be looking at your debt profile, of course, very, very carefully, and also seeing if, the commensurate returns are coming in terms of, ROE and ROS, given the string of international acquisitions that you've done. And I think CapEx has actually gone up The guidance has gone up for this year. You're looking to open more facilities even here in India. So just some thoughts on this. How do you plan to digest all of this expansion that you're undertaking both internationally and at home? And what kind of a top-line growth can this translate into in FY25?
Well, we have a clear guidance and a direction for ourselves as to where we should be hitting in 5-year terms, and that's what we all have been working for. In terms of the capex going forward, as you rightly pointed out, we are growing much more rapidly in India. The emerging markets have shown that there is a huge demand. India is very healthy and growing at a very fast pace. All our customers, as you have seen, have announced new plants. They're growing very fast. We, being a key supplier and a key partner to them, are also expanding to meet their demands. We are also a very de-risked company. As you would have seen, we are 3CX10, where no component, no country has to be more than 10%. That's the direction in which we are. Also, see that our company supplies products which supply to all kinds of vehicles. So we are not focused on any one particular type of energy, be it an ICE engine or a BEV or a hybrid or a CNG-driven engines. So we would continue to grow with them. And these acquisitions also bring in a wealth of new technologies, new know-hows, and new kinds of products which are required by the customers in India as well. And we are bringing in those which are also fueling more and more demand and the need for further capexes over a period of time to support the customers in building vehicles with more features and better interiors.
Mr. Mittal, no, absolutely. I mean, no denying, I'm sure that, all the positives are coming in terms of technology, etc. products. We're just trying to understand the financials because we're seeing that debt number go higher and higher and substantially higher year on year in absolute terms. So therefore, just trying to understand that in the near term, if you could put out a guidance in terms of how will you end FY24 at what top line? And then going into FY25, is it going to be 20% growth, 25% growth?
So I think you've seen the kind of growth and the kind of markets, the acquisitions themselves. We have not, in this quarter itself, not all the complete months have been taken for some of the acquisitions. Only 2 months of revenues have come in. And about $1 billion of top line of acquisitions which are to be closed yet. So they're as well there. Apart from that, with this organic growth, we see a very healthy top line growth in the coming quarters in the year. I can't give you a number as such, but in terms of your question about how do we digest this, I think Kunal answered it very well, that as we are on a deleveraging path, he said that on our EBITDA multiple to the debt, it should not be more, it should be coming less by the end of March.
Okay. All right. So we've got at least that number out for you all. Little shorter numbers, but directionally you all have given us the outlook for a year on. Final question here. I'm reading a Jefferies note, and they see a potential stake sale by Sumitomo Wiring Systems that owns close to around 14% in the company could be an overhang. Have you all heard from them?
I think it is better you ask them. We cannot really comment on their behalf. They are shareholders, much like any other shareholder. It's their stake, up to them what they want to do about it.
Indeed. We just thought we'll ask you all because your shareholders will be a little bit worried, right? Since a couple of sell-side analysts have mentioned out as a bit of an overhang. But we appreciate you all joining in, giving us a directional outlook from here on. Second half of the year will be far better. Net debt to EBITDA will come down, and these acquisitions that you'll have already taken on, well, they'll start reaping benefits as well. It's been good speaking to you all, Mr. Pankaj, as well as Mr. Kunal. Wishing you, your team, a very happy Diwali and happy Dhanteras today as well.
Thank you very much.
For the time being, we'll slip into a short break. Come back, we'll get another management. The management of Granules will be joining in to fill us in with their past quarter numbers and the way ahead.
बंद करो कान बंद करो